Hello there, my friends. Chris Marcus here with you on Friday, July 14th. And today, a quick video about some fascinating news. You may have seen the Dow and the S&P 500 climb to a record close, which, what do you think when you see something like that? Is this a sign that commerce is strong, economy's good, it's going to be Miller time for everyone again, or are we in bubble territory? So rather than take my opinion for it, why don't we just dig quickly into, this is the Wall Street Journal alert that I got going into that article there. And again, I think when you hear some of the comments of at least what the media is suggesting is the reason for this new all-time high, can really help put into perspective what's happening, what's happened for a long time, what's created some of the bubble patterns that we've seen. So with that said, S&P 500 hit a fresh record Friday and posted its best weekly performance since late May. Okay. Investors poured money into stocks and bonds as weak data on retail sales and inflation suggested the Federal Reserve may be slow in raising interest rates and reducing its balance sheet. So where to begin on that one? Well, first of all, just it always makes me giggle a little bit when I hear weak inflation data phrased in that sense that we didn't get enough inflation. I mean, imagine if you go to the supermarket, you buy a bag of groceries, and you're like, it was only $50. I was hoping that prices would be higher this week so I could pay $100. That's another classic Federal Reserve whopper, in my own personal opinion, this idea that inflation is a good thing. It's a good thing for banks, not so good for people, not so good for keeping markets in natural free market fashion and keeping them healthy rather than inflating bubbles. Because remember, all this inflation and extra money has to go somewhere, so it's not an accident that you see the bubbles form. Anyway, regardless of that, the data apparently is suggesting that inflation is weak. So we'll play along here for the moment. But what's going to happen if inflation is weak? If the Federal Reserve comes to the conclusion that prices aren't going up fast enough, well, then they'll be more towards the print money, or at least, if they were going to raise interest rates, which you could think of as unprinting money in a sense, or when they talk about unwinding their balance sheet, you can think of balance sheet meaning money we printed, and now we're finally going to take it out. We're going to undo the stimulus. The theory was that the economy was weak, Fed comes along, gives a little shot of heroin in there, and because it's really, there's similarities between the behavior, with not by any means to belittle the seriousness of, I think you get what I'm saying. But if they're saying that inflation is weak, that means that they're going to do something that's more towards the printing money, or not withdrawing money as fast as they said, something more, as you often hear, dovish. So now we heard last week, and we made a video about this, how the Fed said, well, we're getting ready to pull the reins in, take the printed money out of circulation and unwind its balance sheet. And yet here it is again now, the tone, which, hey, maybe this is the Wall Street Journal's opinion, although to the degree that you get to read between the lines and notice when things start to get telegraphed from the Fed at times and how they react in their own quirky manner. It's just interesting that last week, oh yeah, economy's great, we're gonna pull it in, and now, well, also you had weak data on retail sales. So the stock market is now rising, according to this author's interpretation again, which may or may not be exactly how these things go, but to the degree that here's the front page of the Wall Street Journal that a lot of people are reading, and certainly I think a lot of people following and making decisions based off of, in the end, they're saying the stock market's hit a new all-time high because things are getting not so good again. And on some level, we expect either the Fed not to do what it said it was going to do and withdraw the printed money, or that it's just going to start printing more money. Now, if this starts to sound familiar, it should. It's been going on for the last 8 years, which I remember back in, I think it was March of 2009, when the markets hit the low following the housing bubble collapse. Now, we kept being told it's transitory, temporary, these are headwinds, and it's all going to work and solve everything. Okay, how many years does this take? If this had really worked and the economy was really healthy, wouldn't you be able to undo it if things are really good? Yet, so just pointing out things there's some questions forming here. So we'll go down a little lower here. Latest reading of U.S. Consumer Price Index, which, by the way, that's not really the, if you really want to know how fast prices are going up, that's probably not going to give you much of a clue. If you do want to get better idea of how the inflation rate is calculated in these reports, I'd highly recommend John Williams of Shadow Stats. That will change your view of these things. But yeah, down here, Fed Chairwoman Janet Yellen said during the week that officials expect a recent downturn in inflation would prove transitory. I'm not sure if transitory is actually a word. It's kind of fun to hear them say that. Maybe it is. I don't know. Although in either case, I would have thought that it implied short-term or temporary. Again, 8 years does not seem quite so temporary. But anyway, and she expected it to prove transitory and that they expect to tighten monetary policy at a slow clip. She added that if data continues to disappoint, the Fed could adjust their strategy. So another way of looking at it is that essentially for the last 8 years, you've heard the Fed say downturns are temporary, stimulus is temporary, it's working, it's going to solve everything, we can undo it now. And yet here we see now again the story changes. So, and I think the author of the article here making the assertion that the markets are rallying based on this primarily because they think, well, there's more money in the system now. Yes, that's how a lot of people are still viewing this situation. And so does that mean that the market stays high as long as more printed money is pumped in and then goes lower if the money is taken out? This is the pattern we've had for so long where it's not, think about this. Just by what the Fed even implies they're going to do makes the stock market go up and down. Not whether their products are good or the earnings are good. It's just think about the power that gives someone or a group of people or a bank or a group of banks that essentially can decide the price of the stock market through their monetary policy. So if it all seems a little wacky and almost like a bizarre world from what we thought these things were supposed to work, I understand it was eye-opening as I started through this traditional Wall Street training and then started to see through things, ask questions that usually I didn't find answers to. And I think it's unfortunate because, again, when you print money, it has to go somewhere. A lot of it went into the dot-com era. A lot of it because of the tax rebates and incentives to buy houses created a housing bubble. And when people wonder why we haven't seen more extreme inflation based on the amount of money that's been printed since the last crisis. Well, just look at the stock, bond, and real estate markets and keep in mind that a lot of that inflation is being exported. But this all has to unwind at some point, just the same way the dot-com bubble couldn't go forever, tulip mania couldn't go forever, and the housing bubble couldn't go forever, which is why I talk so much about silver and alternative assets, which is why when something like this unfolds, if really the stress is in the dollar this time and it's these paper currencies that fall apart, I think that's why you're seeing the moves in Bitcoin and a lot of the other things that are happening. Just haven't hit the trigger yet, or that spark. Seems like it could happen any day. Again, it could also go a little bit longer than that. So I think it's a tricky thing to time. But again, if you get the concept and see things that might have to happen eventually, you can adjust and prepare, be ready for these things. You don't have to invest in the stock market. By all means, it's your decision. So I'm not giving any specific financial advice here. But just keep, I know I was born in '78, so growing up in the 80s and 90s was almost like I have saved money, must invest in stocks. Well, sometimes stocks get overvalued, and here we're hearing that data's weak, inflation isn't that high, which means they're likely to print more money and stocks are getting pumped up. What happens when that stops? Well, it'll be fascinating. When does it stop? I wish I knew. Certainly that would make life a little easier if I had the whole crystal ball giving timing too. But at least hopefully this makes some sense. So when you hear people talk about silver or not trusting certain assets, now you're getting the foundation of how some of these things all go together. So with that said, go out, enjoy your weekend, do something fun. We'll see you again on Monday, and leave your comments below. Thanks.